Hi, good evening everyone. Good evening everyone. Hi, good evening everyone. evening, evening everyone. Hi, hi. Evening, join fast everyone. Fast, yeah. Hi, yeah. Okay, let me start. You might not be knowing me, isn't it? This first time I'm interacting with you guys, isn't it? Okay. Yeah. Has anyone interacted with me earlier in some other batch somewhere? I don't think so. Because I generally teach for CIB. I don't teach generally for JIB, generally for CIB. Yeah. My name is Vishal Mantri. I've been in the banking since almost more than 13, 14 years. Okay. And I was in all the foreign banks. I've left banking now. I was in all the foreign banks. Citibank, then Singapore, DBS. Okay. All the departments of retail, corporate, then in trade finance, some part of treasury also to that extent. Okay. So yeah, this much is enough. I've worked in all these major banks and taken the classes for more than now almost 25, 26 batches, more than that of JIB, CIB. Okay. So let's start, isn't it? Retail banking. Everyone okay? Shall we start? Move on, everyone. Yeah. Yesterday you did that orientation class, right? Yesterday means 1 or 2 days back, isn't it? You did that orientation. Were all of you there for that orientation class? Everyone type yes. If you are there, how many of you were there if you are in that orientation class? No, okay. You'll get the recorded session also. Orientation means what? It was a simple class of what all retail banking is and what all these things. Okay. So actual portion will be starting from today. Yeah. Actual portion will be starting from today. In that class, I had stopped at this model, vertical and horizontal model. This is the most important model in banking. Most important. Okay. Okay. You watched recorded video. Okay. Not an issue. So this is the most important model in any banking structure. Okay. So I'll just explain. This is the main topic for today. Today, because this model, if you understand, you will understand whatever you are doing in the banking and whatever are the lacunae in that banking system in your models. Okay. Okay. Let me cover one by one. Okay. First is horizontally organized model. Second is vertically organized model. Third is predominantly horizontally organized. Now, this name is very big. Okay. So I'll just call it PHO. Okay. PHO, predominantly horizontally organized model, and this is PVO, predominantly vertically organized model. Okay, clear? Now, what do you mean by this? And what is all this? Okay, you all are in the nationalized banks or cooperative banks mainly, isn't it? Anybody from private bank? I don't think so. Anybody will be there in from private bank. Is anyone from any private bank or old age private banks? They might be there. Anyone from private bank? Private bank in the sense, Karnataka Bank. Anyone? There are also two types of private banks. Always remember. Okay. Yeah. Old age general private banks. You are there? Okay. Sure. There are two types of private banks. Now we can call it three types. Earlier there were two types of private banks. One was this old age private banks. Old age private banks means what? Karnataka Bank, Karur Vaishya Bank. All these are all private banks. Yeah. Grameen Bank. Okay. So these are all private banks which were established at the time of these nationalized banks only. And second type of banks are new age private banks. New age private banks means what? All these HDFC Bank, ICICI Bank, IndusInd Bank. These are all new age private banks. Okay. So this is a broad classification of banking. Okay, means basically in private banking. Huh? Okay, tell me one thing. How many types of bankings are there in India basically? There are two types of banking. Always remember. Okay. First type of bank is commercial bank. Commercial. Okay. And second type of banking is cooperative bank. Only two banks are there in India. Commercial and cooperative. Okay. Now in commercial bank, everyone understand. Why am I telling you this? Okay. I'm telling you this because you all are working in some bank. But many of us, we don't know what is this, in which sector I am working, what is it I am working in. So, commercial bank includes again two types of banks. One is nationalized banks, second is private banks. Okay. Remember, nationalized and private banks are commercial banks. They have the same structure. Okay. Only the difference is nationalized banks majority shares are held by government, right? And in private banks, nothing from the government as such. Okay. So now we'll come to this topic of horizontally organized, vertically organized, predominantly PHO and PVO. Okay. Now in your bank, okay, you all guys are working in some bank. You all might be working on some desk. Somebody might be working on clearing desk. Somebody might be working on cash. Somebody transfer something else somewhere or the other, isn't it? Now let me ask you one question. How many of you are working in, let's say, cash? Is there anyone working in cash? Cash, cash banking, cash department? Yeah. Okay. Yes, many are there. Got it. So let me ask you one question. All those, not only cash, huh? Don't specifically consider it for cash. It can be any department, clearing also, transfer also. Have you ever shared the data? Okay. Have you ever shared the data of your customers, prospective customers? Means somebody is depositing huge cash because that customer is having huge balances in that account. Have you ever shared that data of that customer with some sales team of your bank? Have you ever shared it? See, you tell him that, see, this is a customer who I'm seeing regularly cash balances and regular deposits, good balance. Convert that customer for some other business, for some FD, for anything, for insurance. You can convert it to anyone, isn't it? Generally, we don't do it, isn't it? Yeah, not only you, anyone in banking, in specifically in nationalized banking, we don't do it, isn't it? So this model where we don't share the customer data is known as horizontal model, horizontally organized. Everyone can hear me now? Clear? Everyone can hear me now? Audio, video, okay, everyone? Yeah? Yeah. Okay. So now I'll come to this horizontally organized model. In this model, we don't share the data of the same customer, okay, of some customer with other departments. And this model is up till now used in many nationalized banks. Of course, things are changing now. Okay, things are changing. What is happening now? All the nationalized banks and private banks have geared up their businesses. They have geared up. Everyone wants business now. Everyone, you are in this in the banks. You might be seeing these days now. What days you are having this? Login day, isn't it? Maha login day, insurance login day. Then what? UPI login day. Then KCC login day. Something like that. You might be having all those days. Many of you might be having this, isn't it? All the days. This day, that day, that day. What is that? What does that day mean? Maha login day. What does that mean? It means you all have geared up for business now. Everyone wants business in this. Okay. And API login day, correct. API login day, correct. What is happening now is even the nationalized banks have nowadays, earlier, before 2010, nationalized banks were behind in the business, but now they have geared up heavily. Okay, everyone. So now what is happening? These horizontal models are slowly getting out of the scene now. Where are we heading to? We are now heading to this vertically organized model. Now, what is this vertically organized model? Now, it means this. See here. Here, this is, let's say, the saving department. This is, let's say, FD department. This is cash clearing, cash department. This is clearing, and we can have thousands of departments. So what happens? All the database of this customer, all these customers, all the departments, okay, that becomes common. Nowadays we have core banking, so database is common now. So this data is shared with all the four departments. Not only four, there can be tens of thousands, isn't it? So all the departments share all the data. Means saving customer who has opened the account, that data will be shared with the loan sales team or the loan department, so that the loan department can contact that person and get the customer. Loan customers data will be shared with the savings department, current department, so that they can source that customer for savings account or insurance or any retail product. Okay. So this is the meaning of vertically organized model. It means what? Same data is shared with all the departments separately, all the teams. Okay. No, it's an English class. So Sobhan Gupta, it's an English class. Okay. Yeah, English batch it is. So that's why, yeah, it is vertically organized. Vertically organized means what? All the departments share the common data. Got it? So that we don't have to run here and there. Every now and then we don't have to find a new customer. Now this data, this common data sharing will help the customer, will help the bank for cross-selling. Cross-selling means what? Cross-selling means you can definitely sell. Here, the rule in banking is now every customer of your bank, okay, needs to have at least 6 products of your bank. Every customer of your bank needs to have at least 6 products. If all the customers of your bank have 6 products each, then your bank will be a huge profitability bank. Okay. So that's why vertically organized model helps in sharing the data with various departments. Now let's come to this. What is this PHO? See here, it's like this. This is totally separate. This is totally united vertically. And these two are in between. Means predominantly horizontally organized means what? Some data is shared. Some data from this horizontal model is shared. See this. Home loans, then it's outsourced, then personal loans also share some data with this. Credit cards, all the departments don't share the same data. Some data means 30%. And predominantly vertically organized means what? Most of the data, again, not full data. If this is 100%, this is 75%. Okay. This is 25% and this is 0%. Okay. This is 0% data sharing. This is 100% data sharing. This is 75% data sharing. This is 25% data sharing. Okay. So here everything, these all models are based on the data sharing concept. Okay. So horizontally organized model is a modular structure using different process models for different products, offering end-to-end solutions product-wise. The data and the products are not, they don't share the same data, the same core software. They don't share it. Okay. Vertically organized model provides functionality across products with customer database orientation, and central customer database is used across products. Okay. So central customer database is used across all the products. Predominantly horizontally organized model is mostly product oriented with common information for some products. Say this 25%. And PVO, I'll call it predominantly vertically organized model. Common information is for most of the products, 75%. Okay. In exam, you will get the question only on this some predominantly horizontal, predominantly vertical, then this horizontally organized and vertically organized. Main question is generally on vertically organized because all the banks are now targeting vertically organized models. They want vertically organized models. Okay. Because who doesn't want a common database, isn't it? So that, see here, when I was in first, my bank was in HDFC Bank, very first bank. Okay, means second bank in fact. First bank was different. Then I was in Citibank, and then I was in DBS, Singapore, DBS. Okay. So remember this logic. These private banks, their basic rule is every customer, we had a basic rule in HDFC Bank as well as in Citibank also. The logic was every customer need to have cross-sold products. Means we need not target new customers for selling any product. We need to target the existing customers, and that concept should be followed in each and every bank now. If somebody is having the savings account, you need to give him the call. Okay, we write notes. No, not required. We write notes, sir. Notes means what? You are writing something? Don't write. Just follow the videos. See here, I'll tell you. All you guys, don't write anything whenever I'm telling. Suppose I'll tell you whenever you have to write something. When we'll be solving some problems, at that time I'll tell you. Okay? Otherwise, you just listen to whatever I'm saying and understand it. That's important. See here, JIB and CIB exams are not related to learning or mugging up. These exams are related to understanding. The more you understand, the easier paper it will be for you. Okay? So now everybody has understood horizontally organized, vertically organized, PVO and PHO. Has everyone understood the concept of this? Horizontal, vertical, PVO, PHO. Okay? Move on. Yeah. Now see here, today it will be a theory part only. In fact, this full topic is theory only. This retail banking as well as wealth. Okay? Product models in retail banking. Product portfolio structuring play an important role in the retail banking strategies of the bank. Though retail assets and liability products constitute the basic structure of retail banking, marketing of third-party products has emerged as one of the important constituents of the retail banking initiatives. Now, this is what I'll explain you importantly. Okay? Is there a material? Yeah, it's material. See, our notes you'll be getting it. The notes are everyone pay attention. Notes are available on the in the this data whatever is given to you. Notes are available there. Tests are available over there. So don't go on writing anything. Okay. What I see here, if you feel something is important, you can definitely write it in the book. Okay. Not an issue. If you feel that something I need to make the point, you can definitely do it. But it's not compulsory. Okay. So now, what is this about the third party products? What is a third party product? Firstly, what is third party product? Third party means which is not related to banking. Which is not related to banking. Who can give me the names of third party products? Give me the names of TPP. Okay. One is insurance, right? Insurance. Everyone, because that is the flavor of the day now, isn't it? Everyone is having insurance only, right? Second is what? Mutual funds, right? Mutual funds also. Third is credit card also. Very good. Credit card. Okay. Some banks are having see your credit card depends. Means what happens is some banks are having their own credit card. Then it doesn't become a third party. But if you are selling of someone else, then it's a third party product. Yeah. Then demat account, correct. See your demat also. I'll tell you one logic. Some banks are having their own demat. If the banks are having their own demat, then it doesn't become a third party. See here, third party means what? The product should not be of your bank. It should be for someone else and you should be just acting as the agents. In third party products, we are acting as the agents. Insurance. When you sell the insurance to the customer, what are you doing actually? You are acting as the agent. You get commission, isn't it? Okay. So that is known as a third party product. And why are all these banks focusing on third party products? Who can tell me? Why all the banks are focusing on third party? Means there are other things also. Gold coins. Gold coin is also an important selling part. In some banks, of course, now the commission is very less. That's why banks don't sell it. But gold coin, some banks might be selling it. Yeah. Yeah. In third party products, main is commission. Okay. And second, yes, somebody wrote this riskless. This is very good, very correct way. See here, commission is there, that's important. But second very important part is the basal proposition is not there in this third party products. Basal means what? Right now, I won't give you the details of basal. You'll be having it somewhere in your studies, okay? Basal is a norm which is where we call it CRAR. Anyone knows this CRAR concept? Anyone has heard about it? CRAR. Okay. So this risk weighted asset we call it. So RWA we call it, and based on that. So understand this. Basal is not applicable to these third party products. Otherwise, what happens? Suppose if I give you the loan of let's say 100 rupees. Okay. So from that 100 rupees, I have to give some amount for RBI as a safety precaution. Okay, because there is a risk involved in that loan. But in third party products like this insurance, what is the risk involved? There's no risk involved. Suppose if I sell some insurance of Max Life, okay, or if I sell the insurance of SBI Life, okay, what will happen? I have sold it, I am a banker, I have sold it. Tomorrow, if something happens to that human being, what happens? Nothing. That claim is settled by that Max Life or SBI Life. So there's no risk involved. Strictly riskless business. Okay. So this has emerged as a huge business. Nowadays, all the banks are targeting roughly 50% of their income from third party. Means suppose if they are earning 100 rupees from core banking products, they should be earning 50 rupees from third party products. Remember, what are the core banking products? What are the core banking products of any bank? Core banking products. Loans, correct? Yes. And second is deposits, isn't it? Loans and deposits. These are the two products of any bank, isn't it? What is the bank? What is the business of any bank? What is the business of any bank? What does the bank do actually? It does a simple thing. It takes deposits and gives loans. Simple, right? Taking deposit and then lending. Okay. Remember, lending should be done from deposits. Okay. So very important part over here is nowadays, have you heard something about, you might be reading newspapers recently. Now, we don't read newspapers nowadays. We get it online, everything, isn't it? So have you seen anything on mobile now? Some latest RBI discussion with nationalized banks and in fact private banks also. RBI had a major discussion last 2 weeks back and government also involved over there. So they had a major discussion on, the discussion was on, yes, that's what my question is. The discussion was on deposits. Have you seen something in your bank also? In your banks, you might have seen that the deposits have dried up. People are not coming for FDs now, right? Because the rates are lesser, isn't it? Rates are lesser. So that's why people don't come for FDs. But that is a concern which RBI has spoken right now, recently in last 2 weeks back. Loans have increased, but deposits have not increased of all the commercial banks and even the cooperative banks as such. So loans have increased, but deposits have not increased. And that is a major concern. Okay. So what have we to do in that case? What will be the target which you will be getting now? You all guys will be getting some targets of deposits now. Bring some FDs. The rate of interest on deposits will increase now. It might have increased by now, some part, isn't it? In many of the banks. Because of the RBI has increased the rates only, basic rates. Okay. Yeah, they might have increased by now. See, remember, rate of any FD. Okay, yeah, 7.25. My God, too good, yeah. 7.25 on FD is a good rate of return. See here, important point is, yeah, important point is all the banks will increase it now. Why? Because the reason is RBI has increased the basic rate, means they call it the benchmark rate. Benchmark rate involves what? It involves one bank rate. There are 3 to 4 main benchmark rates always. Okay. One is bank rate, second is CRR, third is repo. Okay. Fourth is reverse repo. Okay, these are the four, and last one we have some other standing facility, but that's a separate part. Always remember these four at least. Okay, repo, reverse repo, then CRR, SLR. Yeah, SLR was one, isn't it? So these are the basic benchmark rates which RBI always focuses on. Okay. We'll come to this later. We are having all these topics. What is this CRR, SLR? Somewhere or the other we'll get it, all these things. Okay. So, yeah. So coming back to this, the rate of interest are nowadays increasing. Why? Because the deposits have dried up. To increase the deposits, banks, RBI has now increase the basic rates. Okay. And because of that, the deposits will increase now of the bank. Liability products. Liability products are offered to retail banking customers basically under the three spaces: saving, current, and term (FD). Right? These are the three main deposits you might be taking from the customer: saving, current, and FD. Isn't it? Deposits, bank deposits. Okay. What is the difference between saving, current? Anyone? What is the difference between saving and current? Two differences are there. Two differences. What is the difference between savings and current? Two differences. Anyone? Hmm. Correct. No interest on current account. Number one. That is first difference. No interest on current account. That is first difference. What is the second difference? Yes. No need to give interest. First difference. What is the second difference? Main difference. Second difference is current account is open for businesses. Savings are open for your normal savings, isn't it? If you want to do business, you have to open current account. Okay? Yeah. Limited services. Yeah, all these things we definitely have. Number of withdrawals are limited. Number of deposits are limited. Yeah. Yeah. All these things are there. But basic difference between saving and current is only two. Number one, no interest on current. Number two, current is open for business purpose. Savings is open for personal purpose. Okay. I'll ask you one question. Suppose if two persons come to your bank for opening a joint savings account. Joint account we do open. Suppose if they come to you, what will you see in that joint savings account? These two persons, if they are related to each other, husband wife. So will you open that account? Husband wife. Will you open that account? If the two persons are yes, husband wife. Okay. Okay. Yeah. And father son, father daughter, you'll open it, isn't it? Father son, father daughter, you'll open it. Yes. If two friends come together, two friends, not blood relatives, they are not the blood relatives. So will you open the joint account of them? Not blood relatives. Normal, yeah. Here, it's like this. You can open it, you can't stop it. Okay, you can't stop it because there's no rule which says that two persons can't open a joint account. But whenever such thing happens, always remember there are more chances that these persons might be doing some business. Okay, some common interest. Yeah, they might be doing some business. When they are doing some business, so definitely they'll have to open current account. So when two different, those who are not blood relatives, if they open a current joint savings account, always you have to be cautious what that person is, these two persons are doing. Not only two, it can be three also, isn't it? Yeah. Okay. Now, second part, saving and current done. FD, you all know. What is FD? FD is term deposit, right? Do we give checkbooks for term deposits? Do we give checkbook for term deposits? Anyone? Do they give? No, correct? Yes. For ODs you give. Yeah. Means if I take the FD OD and then I can get the checkbook because after all it's a loan then, isn't it? So product differentiation among these accounts is achieved by expanding the scope of generic products from plain vanilla account to value enriched accounts. Now, what do you mean by this plain vanilla? Okay, say this plain vanilla account. Now, these words you'll be getting it in exam. Plain vanilla. Okay, plain vanilla means what? Have you eaten that ice creams? Everyone might have eaten this ice creams. In ice creams, vanilla means what? Which is the basic ice cream? Does anyone know? Which is the basic ice cream? Basic means, remember, vanilla ice cream is a basic ice cream. Suppose if you eat a chocolate flavor of ice cream, okay, in that also you'll be having vanilla ice cream only. Only the flavor is added of chocolate. You eat mango ice cream. It's basically the vanilla ice cream, but flavor of mango is added. Same logic is used over here. Plain vanilla means basic saving and current account. To value enriched account, value enriched means what? In that savings account, how do I add value in savings account? How do I differentiate myself from other banks? What do I do? I'll do this. All these banks are doing nowadays. You might be seeing those ads. Kotak Bank 999. And then many of the banks giving savings bank, they are giving 7% rate of interest. Savings bank. Savings bank 7%. I've seen in one of the bank, I think so Equitas Bank. That is bank is giving presently 7% rate of interest on savings. So these are value enriched products. What others are doing, we don't do. We do something else. But there are other sources also of getting the value enriched. It's not only increasing the rate of interest. Okay. What I can do is I can give value added services in savings account. Like, for example, that debit card which I'm having, I can give the limit or to the higher level, isn't it? Others might be giving 50,000 per day. I'll give them 2 lakhs per day. So that can also be done. Value enriched means what? Whatever others are not doing, whatever my competition is not doing, I'll do that. That is known as value enriched. Okay. Many things are there. How many of you have seen some value enriched products over here in your bank for savings account? Any idea which you give? Many of you might be giving. I know it. What is it you give? Your banks, do they give anything? Value enriched? Debit card. Yeah, debit card is now has become a core. Yeah, UPI, sweep account. Yeah, sweep account. Sweep account is the major thing which we give. Okay. Yeah. There is one more concept here. All these things have become common nowadays. Debit card, sweep, then variant. Yeah, debit card variant you can give. Platinum account card, anything. Okay, privileged accounts. Yeah. There is something more which you can give. I'll tell you what the banks are doing. In fact, now when I tell you, you'll understand. You'll also remember that your bank is also doing it. Means what? Uh, this insurance, general insurance for savings account. You open a savings account with us, and then you'll get a general insurance of, let's say, 2 crores. Any bank has it amongst you? Any of the banks is having this product that you open a savings or current account, let it be anything. You open a savings account with 10,000 rupees, okay, with average balance of 10,000. Sure, yeah. So these things banks need to implement now. You open a savings account of, let's say, 10,000 AMB, average monthly balance, and yeah, 1 lakh insurance to SB account. See this one, correct? 1 lakh insurance. So these things can be done. Okay. Also, many other things are there, like sweep in. Sweep in and sweep out is the best thing which we can do in this banking nowadays. With the core banking solutions, we can give this solution. What is sweep in? Anyone? What is sweep in and sweep out? What is sweep in and sweep out account? Sure. Yeah. Do you have it? Sweep in, sweep out? Yeah. Okay. I'll tell you. See this. Sweep in, sweep out is very simple. See this. I'll explain it over here. Where do I explain here? Okay. See this. This is a savings account. SB I'll call it. Savings bank we call it. SB. And this is FD. Okay. FD. Now these are two separate products. Now in sweep in, what do I do? If let's say my balance in savings is 1 lakh rupees. Okay. So I give a facility to that customer that if you are having, say, in your savings account any amount beyond, let's say, 50,000, 50K, I'll write it. If you are having any amount beyond 50K, okay, beyond 50K, what my bank will do is I'll transfer the remaining amount to FD so that you earn higher interest. So if I'm having 1 lakh in my account, then 50,000 will be kept in the savings and remaining 50,000 will be transferred to FD. Okay. So this is the way I'll be earning higher interest rate on this FD. So this is known as sweep in. Sweep. It's automated facility. Huh? The human being doesn't do it. It's automatically done. Okay. So that is sweep in. So that it's a beneficial for the customer now. If I'm having, let's say, 5 lakhs in my savings account and I'm earning at this normal rate of what, 3.54, isn't it? So I'll be losing on that. So bank will transfer it directly to FD. That is point number one. But what is sweep out then? Sweep out means what? See here. If I'm having an FD of, let's say, 10 lakhs with you, 10 lakhs, okay? And what happens? In my savings account, I receive a check for debit, means check of any amount, okay? So debit check is I receive, but I don't have money in this savings account, no money. So what happens? If there is no money, then my check will get returned, isn't it? So if it is to be got returned, yes, rest amount will go to FD. What if the customer want to withdraw the whole amount from the savings account? Yeah, that's a separate question. I'll answer that. Okay. Yeah. See this. Now look at this sweep out facility. If I'm having 10 lakhs with you as a FD and no money in the savings account or lesser balance in the savings account. So what happens in that case? If I get a check for debiting, my check will get returned. So instead of returning that check, what does the bank do? Bank breaks that FD automatically and transfer the funds to savings account so that the check is passed. But in that case, when do I do that? When the customer gives to me in writing that you can do this sweep out facility, he or she should give me in writing that you should give, you can debit this, what, break my FD and transfer the amount to my savings account. That is sweep out. Okay. This is sweep in. The first one was sweep in. Second is sweep out. Okay. Yeah. Now I'll come to your question. What did you ask? What if the customer wants to withdraw the whole amount from the savings account? Yeah. In that case also it's allowed. Suppose here, if I'm having, see here, I give it in writing to that bank in that case. Okay. It's not for each and every customer. See, the sweep in facility is not for each and every customer. I need to give it in writing to the bank that, see, any balance above 50,000 you can transfer it to my FD and create a new FD account. Now if I come to the bank and then say that, okay, now I'm having 1 lakh rupees, give me the withdrawal of 1 lakh rupees. So bank will at that time say, no, you had given me in writing that convert this remaining amount to FD. So what you do is you can break this FD now of 50,000, transfer it to savings and then take the amount. Okay, that is allowed. So that's why this sweep in is available only to those customers who give you in writing that, okay, in that form itself it's mentioned. In that form itself, savings account form itself, it's mentioned that above this threshold limit, you can transfer my funds. Though if that customer ticks on that, then you can do it. But if the customer doesn't tick on that, then forget this. The whole amount will be lying in the savings account only. Okay. Take one facility among this. Customer is here. Now the question asked to me is, can the customer take only one facility, sweep in or sweep out? Definitely he or she can do it. If I'm having FD only and in the savings account I'm not having that much balance, so I'll take only sweep out. I won't take sweep in that case. So both the things are allowed. I can take either sweep in, I can take either sweep out, or I can take both. Both the things are also allowed. So it depends on the customer. What is the requirement of the customer? And nowadays, what has happened? This core banking facility has provided many options to the customers. You don't means many of you might be wondering, but I have done one type of banking where, now look at this. What am I telling you? I have done one type of banking where the funds in the current account. Now look at this. Whatever I am saying, huh? Suppose today is what? Today is which day? Monday, Tuesday. Tuesday, I think so, isn't it? Let me see. So today is what? Let's say today is Friday. Okay. Imagine Monday today is, okay. Imagine today is Friday. Okay. So what happens on Friday? Generally, all the customers go on leave. Saturday, Sunday, many of them are having big customers. Huh? They are having holidays on Saturday, Sunday. Except you bankers. Bankers don't have holidays, isn't it? Corona, COVID, and let it be anything, you don't have holidays. Of course, 2 days they have given nowadays, but other days you are all working. Even on these holiday days, I've seen many bankers going for a job. Saturday also, all that holidays, Saturdays. Okay, forget it. That's our fate, and that's our way of working, isn't it? Bankers are considered as the pillars of economy, but these pillars, what they face, nobody looks at it, right? How many of you might be facing these pressures in the bank? You all have pressures now in the banking, or no pressure? Do this day, one insurance is required, this is required, that is required, one UPI is required. You all have these pressures nowadays in all these banks, or no? Nobody gives you the pressure up till now. Okay, anyone? Yeah, you all are having it. Oh, everyone is typing yes in this case. It means this culture of private culture has entered these nationalized banks also. Yeah, it's there. Yeah, correct. It's there everywhere. Yeah. So yeah, coming back. So what was the question in this? Yeah, plain vanilla done. This was done. Plain vanilla. This sweep in, sweep out. I explained to you. That's important. That was one simple part. Next one. Built-in ATM debit cards, credit cards, multi-city checks, UPI have become generic features. Now, what do you mean by the generic features? Here, generic features means these have become common things. Common things means what? Built-in ATM, debit cards, credit cards, multi-city checks. Now, many of you might be wondering what is all this given multi-city checks? Every check is a multi-city check nowadays because you are in that banking where you have not seen the checks which were not multi-city. Many of you might not have seen, isn't it? So there was one stage before 2005, okay, where multi-city checks were not there. All the checks were related to that branch only. Okay, that was the concept. But nowadays, everywhere it's multi-city, isn't it? UPI. UPI has also become a generic feature now. If no bank in India today can say that, see, I am giving UPI, customers will say, so what? Everyone is giving UPI, isn't it? So, what is the new thing coming up against UPI? Has anyone read about it? What is something new which is coming up in retail banking that will affect retail banking the most? Yeah, correct. E-rupee, CBDT and e-rupee. These things will change the banking a lot, a lot. What is e-rupee? Does anyone know what is CBDT? Basically, CBDC we call it, CBDC. CBDT is separate. CBDT is related to taxation. Okay. CBDC is related to currency. Okay. That will change a lot things. Okay. See here, I'll tell you one simple rule of this soft form of rupee. Yeah. But I'll tell you one basic difference between CBDC and your online banking. I'll tell you one basic rule. That concept should be very clear. What is CBDC? See here. Suppose if I'm having, let's say many of us, all of us are using this, yeah, full form is, yeah, central bank digital currency. Understand the concept, but see here, all of us are doing this online banking, UPI banking, right? Transferring funds. So many of you might be wondering, what is the difference between this, whatever I'm doing? Now also I'm transferring online only. In CBDC also I'll be transferring online only. So what is the difference? Why should I have a new system when your existing system is there? Okay. So the difference is, look at this. Okay. The important difference is now if I'm, even though I'm transferring 10,000 rupees, let's say I'm having 10,000 in my balance. Okay. So that 10,000, even though I'm transferring it to somebody, but if I go to ATM and I can withdraw that 10,000 in notes, physical notes. I can withdraw that 10,000. So what does it mean? It means that RBI has to print every note of whatever amount is available in that ATM also, in that banking system also. Every note is printed. Every note. Then you'll say, where are those notes? I have not used those notes at any time because I do digital banking only. So where are those notes? So those notes are lying with some bank, either your bank with whom you have the balances, and the total of all these banks plus with this common public, whoever are the common public, general public who are having those notes. So notes are lying somewhere. But what is the difference between digital currency? In digital currency, you won't be able to withdraw cash from that ATM. For suppose if I am having 10,000 e-rupee, so I won't get 10,000 rupee notes in that case. That is only it will be transferred from one person to another, another to third, third to fourth, anywhere, but no physical cash. So what is the main advantage to RBI in that case? The advantage to RBI is the printing of notes is reduced. Printing of notes is a heavy business, okay, heavy loss to the bank. Okay, so printing of notes will reduce in that case. Okay, so that is a basic thing which will change the entire banking system now. Okay, there is also something more in that case that is called as predefined contracts, but I won't come to it right now. Predefined contracts is a very good term, but I'll come to it later someday whenever we have the topic on that. Internet banking, telephone banking, mobile banking has become essential value additions. So these are also common nowadays: internet banking, telephone, and mobile. The value enriched by tagging group insurance products in life and non-life segment are at a very competitive premium or providing sweep facilities from saving or current to FDs. So these things have become a new tagline now. Means giving insurance of life or non-life for opening the savings or current accounts. So that is also given. Okay. Then say sweep in, sweep out. I've already explained this. These are also given. The product differentiation among the bank is very thin, and only value differentiation is a key factor across the banks. So remember, see this product difference. Understand the difference between product differentiation and value differentiation. Product means what? Saving is saving. You go in PNB, you go in SBI, you go in any HDFC bank, you go in ICICI bank, or you go in any bank. Okay. So saving is saving. You deposit the money, withdraw the money. So product differentiation is very thin. There's nothing remaining, no difference in the products, basic products. So where is the difference then? Difference is in the service. Value differentiation means providing that service. The better you speak to the customers, the more are the chances that a customer comes back to you. Okay. In your branches also you might have seen many of the customers come to you and means tell you that see when you tell to the that customer to go to some other employee and he's a means senior customer from your bank, so he'll tell no sir, no ma'am, that person is very khadus, I speak to you only or this person only. So it depends on the value differentiation which you give, the customers, the service which you give. Okay. The technology, process, and the delivery efficiencies make the difference. Now this has become a very important part. Huh? We call this technology, process, and delivery. So this can be combined into one word that's called as TAT. Anyone knows what is TAT? TAT. What is TAT? TAT is any full form of TAT? Full form of TAT is everyone, anyone? Turnaround time. Correct. Turnaround time. Okay. Turnaround time, very important for those who don't know. This is now the basic of any banking system. Turnaround time. Okay. Whenever, within what time do you open the account? Within what time you process the loans? Okay. So these all things have become tax now. What is the loan processing required for on CIBIL base? On CIBIL score, the loans are nowadays given in hardly 1 minute. 1 minute, and I'm not talking of some private bank, I'm talking of nationalized banks. SBI card for those who are in SBI, okay, and even the PNB also, but I've seen SBI cards, experienced it myself. SBI cards gives you a loan in, yeah, in fact many cards, all the card systems also, based on your civil, they give you the law, yeah, PAPL, even PNB. See here, all the nationalized banks have geared up now, hugely geared up. So these banks, based on your CIBIL, the loans are given automatically in hardly what 15 minutes, not more than 15 minutes. Okay. So this credit card business, that's why it's coming up hugely. Credit card business is about two things, not only credit card, it's about the CIBIL loans also, CIBIL based loans. Okay. So all banks offer different product deposit products with the provision of monthly, quarterly, and cumulative interest payment options. That's okay. Now this you everyone amongst you knows FD rate of interest is either monthly, quarterly, or this cumulative yearly. Okay. Yeah. Retail asset. Okay, that will cover tomorrow. Asset. Okay, this was all about liabilities. Okay, clear? Okay, now your questions. Anyone has any questions about this? Because today's part was only this much liabilities. Okay. Any questions which you might be feeling in the banking system also, not related to your whatever we have studied. If you feel something about banking, but specifically banking, otherwise nothing else. Yeah. So remember, so last 5 minutes are for that banking questions only. Anyone has any questions? Want to know something about something, any banking product, or which you have heard about it, but don't know something about it? That also we can clarify it over here. See here, I worked in all the departments, means retail, then I worked in corporate financing, then I worked in trade financing, import export, related to only foreign forex. Okay, I worked in treasury also. So that's why I've seen all these things. What is the difference between MCLR and EBLR? Okay, and in which way? Okay, too many questions. Okay, let's wait for some time. Okay, in which way e-rupee is better than normal rupee to customers? Okay, yeah. Switch and switch out से बैंक को ज़्यादा फायदा है क्या? Yeah, बैंक को फायदा है. See here, I'll give you one by one, okay? And how e-rupee will impact the employee working of employees. Yeah, see here. Mainly all the questions are asked. No, MCLR rate that we can definitely check it out. And what are the latest MCLR rates? Okay. So important point which many of you have asked is e-rupee. Many of you are asking that e-rupee only. That how, okay, if I miss the class, how do I listen to them? You have recorded videos available. Okay. Sir, why Grameen Bank don't have a UPI or yeah? Sir, they have yet to come up to that curve. Grameen Bank, many of the Grameen banks have still not come up to that curve. These are because what happens is we are in this Grameen banks are in this agri areas, means village areas. So that's why they don't have through that level. But I feel that nowadays it's nothing like that. Every bank should have the basic amenities available. Okay, the board of directors of that bank should definitely decide on giving these value-added products. Okay. Now coming to the other question, e-rupee. How e-rupee will impact the working of employees? Here, employees will be freed. Employees will be freed from your routine works. Okay. Yeah, Grameen banks are also providing. Yeah, they will be freed from your routine works. In fact, Grameen banks are also nationalized banks only. Yeah, to cover bottom of the pyramid. Yeah, cooperative banks are separate. Okay, that will cover later someday. Yeah. E-rupee will free the customers, okay, employees to for doing some value-added services like insurance and other products. Okay, yeah. Next one was what? Anything was there? One sec. Yes, 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 yeah. Okay. So anything else? Yeah. What was this? So, yeah. One sec. There was one question. Somebody has asked me. What is the difference between MCLR and EBLR? Okay. MCLR. That question is remaining. What is the difference between MCLR and EBLR? Okay, it's very simple. Here, MCLR is based on the bank's internal. Understand the concept first. Huh? MCLR is based on the bank's internal processing. They are internal cost, and EBLR is external benchmarking. External benchmarking means what? External benchmarking means suppose SBI. I'll give you an example of SBI. It's not related to SBI only. SBI is having home loans based on the repo rates nowadays. They have linked it to repos. Many of the loans have been in fact many banks. Why SBI? Many banks have linked their rates to loan rates to this repo and deposits also. So that is EBLR. I benchmark my rate to some external rating means benchmark like repo, or I can do it for CRR also. So that is EBLR. But MCLR means what? Marginal costing. Marginal costing means what? Whatever is my employee cost, whatever is the risk for me, what all is my running cost, all these costs will be included in MCLR. But in EBLR, none of these will be included. It will be specifically benchmark plus 2% whatever I take. So that 2% extra will cover all these my costs. Okay. That is the difference between EBLR. EBLR is related to external benchmarking and MCLR is related to marginal costing. Means MCLR is internal, EBLR is always related to external benchmarking. Got it? Who was this? Lakshmi. Okay. So we'll stop over here today. Okay. Chalo, bye. Tomorrow again, same time. Chalo, bye. Chalo, bye. Bye, everyone. Bye, bye. Bye. Yeah.